Can you guys see my screen? Mm. Make a copy. Weekly calls. Right. Okay, okay. Okay, I think I waited enough. If there's anything, the co-host will add people in. So today, what I wanted to talk about is liquidity markups. Okay. So I do understand that I sound like a broken record when I ask you guys to just try to master um, breakout traders and liquidity. And I know it sounds annoying, but it's just to show you how important it is. And I know a lot of you guys get excited because you want to mark up entries, but just look at it like when somebody's trying to build a house, we have to have solid foundations. If you try to immediately build a house on a slab of mud, then potentially your house will not be solid. So this is why I think what's hard about you guys of joining the shelter and having access to this knowledge is most of you guys were already trading. So it's like kind of annoying to go back onto the drawing board, but I can guarantee that it's going to help you. I had the same type of issue when I tried to understand liquidity trading. Since I was already making money in the market, I had to change my complete way of thinking just because I was already trading. So it was a hard time as a transition. It was very difficult for me to trade both strategies at the same time. And it probably took me 6 months to stop trading the old way. So today I'm going to be showing you exactly what I do and how I mark up liquidity trading. And we'll go over all of the strategies. I think that the ones people struggle the most are either breakouts or break and retest. And today I'm going to show you exactly how I market. And also remember that this is my personal experience. I'm not saying this is how all the retails trader trade. I had some people telling me that this is not how they would trade the breakout strategy. I do understand this, but I had a lot of hours of testing, confirming those knowledge, and also practicing and see it live reacting. Because it's cute that I tell you guys that when you have breakout traders like this, and if they induce this and go higher, this is a false breakout structure. But if you don't test it and if you don't see this candle closure in live, then you're probably never going to be able to spot the liquidity because you haven't seen these live and you don't have the Ricardo experience to understand it. So I'll go over a full day. We'll go into hindsight because remember, I see a lot of people trying to go in bar replay. And what happens when you go in bar replay right now, you will start making things up, right? If you see this, right? Okay, so you will mark this, you will mark this, you will mark this, then this, then this. This is probably not the way to start. I like going in hindsight, and when I look at the day, let's say, then I practice one time in hindsight, and then I go into bar replay. So let's look at the pairs and see which one we could have that looks good for us to test. Okay. Let's go, let's go, let's go. That's not cute. As you can see, it's pretty easy to see which days are good because, and this is something I will teach you guys also how to spot clean pairs. This looks good. Okay. So here we go. So we have AUD yesterday. So that's cool. Pretty recent price action. So it's perfect. Let me just move into the next Asia session. I advise you guys to download our indicators. It has been added into WAP. So you have, it's just going to be weird that everybody has the same colors than me, but you have the Asia session indicator and you have also the imbalance indicator. We're currently working into the real Asia session, and it will also work into having new indicators coming. So that's really important. When I start up the day, of course, when I wake up, it's around 7:30. Today is Friday, so I woke up a little bit later. So I think I woke up around 7:15 my time. So let's say that this is where I woke up. Okay. So this is really important that you guys understand that I don't trade London. I don't need to trade London. I traded back in the day. It's toxic and it just kills me. When I start backtesting, not backtesting a day, but marking up liquidity, the first thing I do is I start basically around like 2 a.m. Asia. I know some of you guys heard me say that the first hour or so of Asia is irrelevant because it's the spread hours, and you guys are right. But for me, I start around 2 a.m., even though it's a little bit more than a whole hour. So 2 a.m. is usually where I start by marking up stuff. It's really important to understand that not every single retail strategies will make sense, and you'll understand why, and we'll go over today together. So I start up, I see this uptrend, right? Price building higher, right? Pretty straightforward. Now we see here maybe a first break of structure as in a change of character, and we potentially have, right, our SMC traders. So let's call it SMC traders. Ooh, that's pretty. Here we go. SMC traders. So this would be the first liquidity I would mark. Okay. So this is done. Again, this is in hindsight because remember, I wake up at 7 a.m. my time. So what happens is I need to mark up everything that happens before, right? Of course, I don't do this on a daily basis because my brain is able to see liquidity pretty easily because I'm used to it, right? As you guys saw on the Masters Technical, it takes me probably, 5 minutes to go over my 10 pairs? Not even, because I can see it pretty easily. And this is the goal, right? The ultimate goal is like removing your training wheels on your bicycle. I mark up the liquidity and I put lines on the charts so you guys understand it. But I have literally nothing. And some people that have known me for a couple of years know that my charts are so clean that literally has nothing other than a line. That's it. And the line is often to put annotations for people to understand. When I trade alone and hyper focused, I put nothing else than my buy entry or my sell entry. That's it. Okay, so this is an ultimate goal. If it motivates you guys, fine. Okay, so now we push price. Price pushes. We can clearly see here engulfing candle breaking this internal structure. Why is it an internal structure? Because it hasn't made a new low. We will go over those internal structure eventually. Okay, just to put a little idea, this is the structural leg, right? And the complex structures are what's internal. So as you guys can see, here's the difference. And let me put this in red. So this is also something that traders use that is called a complex pullback. So structural legs can be identified on a higher time frame, and structural legs can be identified on complex pullback can be identified on lower time frame. Sorry. So low tip here. So now again, we move this stop loss here, right? Price pushes, comes back, retest this zone. This is really important. Break and retest, we have a break and it retests this zone. So we have it here, right? It's a zone. It's not a line. It's a zone. So they mark this as a zone. So here we have, we have potentially break and retest entering. So I'll mark I'm just gonna mute Discord because people are spamming me, okay? If you don't mind. I'm literally being spammed and I don't want you guys to be interrupted. Okay, so let's go, let's continue. Oops. So here we have breakout traders. Here we have obviously breakout traders again, but here we have break and retest. A lot of people ask me how I'm able to copy those things. Is you press on control and you drag the mouse, right? And it copies. Okay, perfect. Let's continue. Now we have a clear break here again, right? Breakout traders. As you can see, I don't add those multiple stop losses because this was a visual representation so you guys can understand that this is actually what they do. But I don't want you guys to mark this up on your chart. That's going to be completely messy and really irrelevant. Okay. Now, can we argue that maybe as a higher time frame leg, people are pushing here? Yes. So is this relevant to mark this line here? No, because even if this push led to this high, the stop losses are at the same place. So why would I mark something that would just add a line to my chart that will just add a second stop loss here, right? I'll show you some cases where it's relevant to market, but in this case, it's not. Okay. Perfect. Again, we have more break and retest traders entering here, as you guys can see. And this is overly detailed so you guys can understand, but I don't do this usually. Okay. Now, remember, break and retest have two variations. They have the variation where they enter at a new high when a zone is retested, or there's the more aggressive ones that when price retests here and don't make a new high, they enter anyways. So this is also very important to understand. This is how where things get out of hand for some of the markups I've seen. Okay. Now, price, as you can see, it makes an internal structure here. Again, why should I mark it? It doesn't matter because we already have a stop loss location here, so we don't duplicate stuff. And as you can see, candle closure here wicks out, takes out perfectly this liquidity, perfectly. You can see it perfectly. And this is where people forget to also enter. We have buy side, sell side liquidity being built. We can understand that the vector didn't push down, but eventually it closed down here. And some people just put sell stops here, right? So now it's where we confirm this structural high. I see a lot of people do this also. In some cases, when the structure would be clear, like this, and this, you could make a stop loss here. But in this case, it's not good. Again, can we put the trend line here? Of course. Why would we do this? It's just going to duplicate those SL. So in this case, we don't put it. Our goal is to keep the chart hygiene intact. Okay. Now again, price we have here clearly takes this high. And this would be a perfect example for you guys. Imagine price would have done this, okay? Like this. We could have confirmed that a stop loss would be here, right? But in this case, where price breaks this would have been the higher time frame. I say higher time frame, but it's not like H1. It's actually like the structural leg, probably on M15 or whatever. This structural leg would have taken this zone, so then we would have a stop loss confirmation here. So that's a perfect example where we need to mark these two ones when they're relevant, and that's the opposite of this zone. Let's say this zone was already planned as a stop loss location, so that's why we don't put it here. But in this case, if price would have done this, then this would have made sense to add a stop loss here. Okay. So again, this is another example, but we'll see this. Now let's move and put the stop loss here. Okay, now price mitigates this zone. We don't care. Our goal is not to identify nothing. So now, can we see, and this is where a lot of mistakes happen. I see people do this, do this, do this, do this. For me, there's no real new structure. This is the structural leg, right? It makes no sense to mark up all that liquidity. The only thing I would probably mark up would be this thing here, but even though it wigged down, for me, It's just that if we had mini stop losses here, it would have been induced, as you can see. And this is where we adjust. We confirmed earlier that probably there's no liquidity here because of that clear structure, but we justify the liquidity based on this candle closure here. Having the candle reaction is really mandatory. If you guys don't see the sentiment on those candles, you're doing it wrong. I've saved 2 stop losses today just because of the candle closure reaction. It's really important when I send those charts in the master's technical, you can understand that this is something I monitor. I put alerts. It's the only thing that seems complex is that I do it on multiple pairs. But this is where people should go on M1. This is where people should monitor the candle closure. It's really important for you to understand market sentiment, and those actual candles give you a whole story. As you can see here, boom, confirmed. We add the stop loss. I cannot be right completely every single time, but one thing is certain, I can always double check. And in this case, it would make sense for me to justify that stop loss. For now, I'm not putting the crosses here because I don't want to mess up the chart. I just want you to understand how to mark up liquidity. Okay. So now rise, continue, goes lower. We can see here. Now, really important. This is where, again, we double check our potential mistakes and we double check our justification candles. We said that we didn't have a new high in here. But then we have price here perfectly wicking out. Your task is now to stop and justify why this candle closed that way. Why was this candle closing that way? The same potential way that there is liquidity taken. How? Now you have to do your own due diligence and look, do we have liquidity here? Did price open? No, I don't think so. I really don't think this is a valid structure. It hasn't pushed a new high. I personally think it's not good. Now, why was this taking with speed? Is it this structure or no? Then we look to the left. Oh, what happened here? Here we go. Perfectly break even those SMC traders. There's no doubts that liquidity has been taken, and now we can confirm that these retailers here are done. And now this is the reason why Asia low isn't taken. Can you just see this level of understanding based on just those simple things that I showed you in the video? People would cry their life because they're saying, how come Asia low is ignored? Because we broke even those SMC traders, meaning that the stop losses below this low doesn't exist. If the chat right now is calm, it's probably because you guys have your mouth to the floor. So hopefully you learned something. Okay, let's continue. All right. So we can justify the break even here, right? Remember, I cannot be right all the time, but one thing is certain, I can justify everything just by having a good thought process. Now I see that this, again, using the proper imbalance tool, we can see that we have an engulfing candle and we have like kind of an internal structure here. We could mark this one here. I think that it would be relevant. And even if we mark this one again here, like this one here, it doesn't really make any difference because the stop losses are at the same place. Remember, don't overcrowd your chart just because you want to put all the retail strategies. If this one, all this crap creates the same stop loss, remove this bullshit and just keep this one here. Okay, let's continue. Now, let me just again mute Discord. Sorry. All right, so we continue. Price. I don't think that this would be really valid as an internal structure, especially since I think that this one looks better here, right? And as you guys can see, potentially we induced break and retest traders, right? We would add this thingy here. here, right? But at the same time, I think that we, oh, sorry, my bad. Here we go. Here we go. And breakout here entering. So this is where we have people entering. Now price pushes again, same thing. Why would we add another stop loss in this crap if we actually know that it's using the same structure? But now this is where it gets nice because we potentially have this structural leg using this as a push. So now we add a stop loss here. And now starting to make a kind of a sense of having seemingly equal lows here. So let's mark up those equal lows, right? This push led to this high. This push led to this structural high. So here we go. We justify it. Okay, let's continue. Now we take this liquidity. We take this liquidity. Look how perfectly, here we go, faking those equal highs. Boom, coming back, potentially breaking retest here. I'm not going to mark it because this is not really a zone. It's more of a structure. I prefer when it's zones like this. As you can see, zones. Break and retest, I have studied them a lot online. I think you guys already know that there's a lot of retail traders or gurus online that trades this strategy. I've been studying them a lot, and I think I've had a good grasp because the break and retest traders are the retail strategy I traded the less when I was practicing back in the day. And it's this is why I keep studying every day. Okay, let's continue. Now we fake those equal highs, adding even more confluences that there's potentially liquidity here. This is my type of entry, right? I would literally enter this crap here to target those highs. Anyways, that's not the point. Now let's go. We have that inducement. Let's go to the left. All right. Okay. Now let's try to justify again. Okay, this price awakes this thing here. How can we justify that this has liquidity, right? Can we understand that potentially there is liquidity here? So this is where things get tricky. We need to justify why price awake this. We have Asia high, right? And let's try to work together and understand why there is potential liquidity here. So we have this line here, right? Here. And I don't have the answer. I'm actually thinking the same way you guys should think. We have this leg here. Okay. What do we have here? They broke even these guys here. So I'll just add this here. Did we just fill this imbalance? I can read this here. We need to find the reason why these guys, because what I don't like is this low hasn't made a new low, so that it would have made a lot of sense. In my opinion, there's no liquidity here. It doesn't make a new structure. This structure is internal. It's not, if it would have made like this, okay, it would have made sense. But for me, there's no really liquidity here. So this is just a reaction out of those liquidity. It just potentially slipped higher. So personally, in my humble opinion, I don't think there's liquidity here, but we'll have to rethink about it. And potentially later I'll be in my pool and just figure out, God damn it, I know why. So we'll come back to it. Okay. Now let's continue. Now price breaks an internal structure here. For me, not super clean. We'll still mark it because this is a valid structural leg. Price comes back. Please make sure you mute yourself because otherwise the recording are going to be impacted. Perfect. Now price comes back. This would be the kind of entry I enjoy here. And we come back and we break even these guys. One structure, two structure, three structural high, potential confirmation that we have a break-even zone. And as you can see, we wicked perfectly. And let me just, since I got excited for the left, I forgot to put this here, and this here. Sorry. Okay. Again, look at the candle. let's wait for a minute, come back here. What I'm saying, the candle, it's this one. Look at the candle closure. This is how it closed, right? It can go lower. It doesn't matter. It's just filling that POI here. It's completely okay. But this is how you justify a break even. The speed, the momentum, the actual sentiment that those candles leave you when they close. Okay. So it's really important. Let me just go back into Asia session. My bad. Here we go. Okay. So we have potential confirmation that we have break evens here. Okay. Now price here doesn't make a new high. This one makes a new high here. So now we put breakout traders here and we add the stop loss. Comes back. I don't think this actually breaks even these guys because it hasn't made a new high. So we can potentially mark the break-in retest, right? Break-in retest here, break-in retest, break-in retest. All right, price pushes again. Should we mark another stop loss? No, it uses the same structure. Let's keep it relevant. Now price takes this liquidity, right? Let's look to the left. Do we have something else? No. Okay. Takes this liquidity, comes back. Okay, let's justify is there something in here. Maybe now we could since we have those candle closure here, we could maybe justify this as being a breakout internally because look, we made a new high here, a new high here, a new high here. Nobody enters, but it still made a new high. Maybe those guys break even. And look how I adjust my markups based on those candle closure. These guys see those chart patterns as being the holy grail of their whole trading strategy. And it's the case because it's adding evidence on the field that potentially they're looking for reverse. If somebody, I don't know what the scandal is called, like, is it a reverse hammer, doji, whatever that shit is? It's adding them potential FOMO to buy. If you go back and you see that candle closure like this, they're looking to buy, respecting the structure, looking at this as being valid, and this is something you guys need to look for. So let me just go back into Asia. All right, all right, all right. All right, let's continue. Now price pushes here, breakouts. Let's see to the left. Is there anything? We always compare to the left. Now we move here, right? No break in the retest zone. Now we're starting to see that trend line. But again, is it relevant to add that trend line? Let's look at it. Okay, so we have one bounce, two bounce. The second bounce adds a stop loss. Now makes sense to add the stop loss here. Remember, we didn't mark a stop loss location here because it didn't make a new high. So now it makes sense. And look, right? Comes back potential to those breakout traders when they wait for the candle closure. You can see it here. And this is where it's important to adjust. Okay, so that trend line is here, adds a stop loss here. Let's continue. Price closes above this low, kind of an internal structure again, not so clean, but I think it's pretty good because of the speed of that candle. Now price pushes lower again, speed of candle here, right? Here we go. Oops. Now again, why would this be relevant here? Why? Because it has a stop loss here because of that structural leg push. This one takes care of this one. This one takes care of this one. This one is the leg. Here we go. We add a stop loss. Now taking all this liquidity, boom, boom, boom. Now price here takes these guys out. Now price here mitigates this zone here. I think there is potential about having this here. Okay, look how they push and how they come back in wick perfectly. So now we know that this one is already taken. There's no sell side liquidity in here, right? Now it comes back here, right? Perfect structure. Look, perfect structure here. boom. And this is why, this is an advice I would give you. This is why I use the tick line with my line chart. So I don't get doubts about is a zone being triggered, right? Now this is out, comes back, right? Break here. So now we have breakout traders here, and we have stop loss locations here. And now we have break and retest traders here, right? Now we have, again, and you should notice that I say potential because there's no real truth is if someone entered. Here, you ignore this week because they entered when price closed. So this one is good, right? When price pushes, you don't mark this one. Now it's taking this liquidity and it's taking this liquidity. And now means let's go and check where. Let's look at the chart again. If we miss something, do we have a trend line here? No trend line here. Do we have a sell side liquidity here? No, no. Let's mark who's out now. We confirm these guys are out, right? These guys are out based on this. Oops. These guys are out based on this one here. These guys are out based on this. You can see the wicks confirmed, right? These guys are out based on this here. These guys are out based on this again. No doubts about it. These guys are out based on this vector candle here, engulfing, whatever you call it here. These ones are out. Now, are these ones out based on this? I think that there's two things, two sides of the metals. Here, we can say they're out because they moved to break even, right? That's the first thing. But remember, there's equal lows that made a new high, right? So they entered literally, they literally enter here. And you're laughing. This is just 18 fucking pips. People trade with 45 pips stop loss as a swing trader. So this is completely valid as an equal low. So I will not put an X here because I think this is very, very important liquidity. Here we have these guys here, move to break even. We confirmed here. We got these guys here wicked out here, right? These guys wicked out here. Oops. God damn it. Sometimes with this little X, these guys wicked here. These guys wicked here. Now these guys, they made a new high here. So I doubt that, I think that potentially, I don't have clear evidences that this has been taking out to break even. So I will keep it there to be honest, but it's most likely out. But I don't have evidence that this is out. I think that the trend line proves it, but the fact is that this structural high wasn't super clear, and I will, what I do when I have a doubt, again, I don't have all the answers, so I put this and I come back later and I think about it. Okay. So now we have these guys here completely out in seconds. We have these guys here wicked out here. These guys here, oops, wicked out perfectly. These guys here taking perfectly. And now we have people entering here. I forgot to put this here. No clear up, but since it closed above after, we have liquidity here. So what you guys will expect would happen potentially to the next day, right? Boom, 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 boom. That's it. So take a picture of that in your head because it doesn't need to, you don't have to take a picture because it will be uploaded in the library. But that's pretty much it on how I do it. And I suggest you do the same, only adding evidences, confirmed entries, doubting the fact, the way I did it. It took me 40 minutes to do it. It's not normal for you guys to take 5 minutes to do it. Doing this requires tremendous amount of thought process. And don't get me wrong, doing these kinds of markup in hindsight, you guys think it's not good, but your brain actually sees this and records them and remembers them. Let me just give you a little analogy. I think some of you guys already binge watched shows on Netflix. I did. I love binge watching show. Have you noticed that at the second viewing and in the third viewing, you start looking and hearing and watching stuff and noticing stuff that you never saw on your first view? This is because your brain eliminates noise that has already been seen by you and adds the rest that you haven't noticed the first time. So imagine if you do those daily markups constantly every single day. I do these 5 per day. I do 5 daily markups per day. And all of you guys already saw the way I trade. So I think you guys should at least do 10 to 15. And doing those is like if you actually traded a new day because you stimulate your brain, you actually practice, and please don't doubt on the brain skill of adapting and noticing stuff. You will start doing stuff without even realizing you're doing it. How many times you brush your teeth in a day do you ask yourself if you put back the lid of the toothbrush or the toothpaste back on? You didn't. You don't remember doing it, but you did it. Why? Because it's a second nature, because your brain is so used to it. It's just that people don't want the brain to actually get used to those price action by just practicing. There's no secret formula. And I think the way I am today only shows that the only thing I did different than you guys is just practice and experience. That's it. At one point in the shelter's journey, we will all have the same knowledge. Once this happens, what will be the difference between you and me? It's time. Once time is taken in hands and that you put it on your advantage, then you'll become better. So that was my daily markup for the day. So what I'll do right now is I'll stop the recording and then we can go to the questions. So let me just cancel the recording real quick.